Tesla creates chaos for the Nasdaq and for the S&P, and it's a very profitable experience for shareholders. We want to thank we'll give you information on our new singers that's supportive. We want to thank you for joining us once again. This is Greg for Teslafaninsight. Want to make a shout out to our Patreon supporters. Without you, our show does not exist, and we appreciate your support. We also want to thank our subscribers, as well as those who take the time to like. Also wanted to encourage you that we're happy to respond to positive, feedback that supports more knowledge for our viewership, but we will block you if you do crazy stuff in our comment section. At any rate, today was a terrific day. We're on December 7th, 2020. We're on the countdown to Tesla's entry into the S&P, and today was one of the best days of the year for the stock. So this show is designed, one of the problems with trading and investing, particularly in this situation, is that everyone wants to know what the exact perfect answer is of what's going to go on. And instead, what anyone can really do is ask some good questions about what's going on and the feedback we're getting from the markets to kind of determining what's occurring. So that's the real thrust of this show today. So first of all, we wanted to review, well, what's really going on with the S&P and Tesla's entry, et cetera, et cetera. The first problem that I wanted to note is that there's a question mark out there as to whether or not all of the large index funds who've purchased their stock have completed their purchases. The answer is the stock price was up. It really closed at $595 yesterday on Friday, and today it opened up strong at about 610 and was strong all day. Got to a high of I believe 647 and then kind of pulled back into about the 640 zone. Now, a nice 50 point or 7% move in the stock price is an illustration of the fact that no, a lot of the entities that do want to purchase have not had a chance to do so yet, and they're now executing that as we roll towards the 21st entry into the S&P. So the next question is, does anybody know for sure who all the buyers are and exactly how much they're going to purchase and when they're going to finish doing all their purchasing? So that will be a cue to the fact that the stock price is not going to continue rising anymore. My answer to that is, I don't know the exact answer like everybody else does, except for the managers that are in that position. But I will say that in my mind, where we're at is that we're in the 60 to 70% of the purchases that were appropriate zone. So, I could be off too high by 10, too low by 10, maybe 20%, but I think it's illustrated in the strength of the stock today. I also wanted to note that given how much time I've spent studying Tesla stock, it's amazing to watch its behavior, aftermarket, pre-market, all these different things. For example, on Friday, the stock closed at 595-ish, within 25 cents of that. And then right after hours started, it bounced up to 599, and then all of a sudden it hit sort of 601-ish after close. We knew it would be pinned below 600 on Friday because there are a lot of expiring options that would end up worthless at that position. So we expected that, and we expected it to be a nice gap, 5 points or so between where it ended, so there wouldn't be any oops, and all of a sudden all those 600 calls would be profitable. So all that was expected, and so therefore I thought it was a pretty well-organized analysis of what was going to happen, and it did. Now, though, we're starting to see strange things happen with the stock, which is part of the reason why I really feel we're not really there yet. And what do I mean by strange? One example is what I described. Stock finishes at 595. And then when you look at all the data, it claims that the stock opened up at 600 in essence and then ran up 50 points today or whatever that was. And the reality was that number is 5 points higher than that. So we could argue that there's a green light from Goldman Sachs for the stock to go up into the mid 700s. And the way things are going today with the nice 50-point run and Tesla's usual move of about 50 when it's in sort of a power zone, we wouldn't be surprised to see a nice, 20, 30, 40, 50-point run again that might occur on Tuesday. Now, Monday, Tuesdays for the last 6 months for Tesla has been very strong. Very often there are pins on the previous Friday, so the stock really should have ended up at about 610, 620 on Friday. But because of the pin, we're kind of seeing it sort of open up and get back to kind of where it should be in the 610, 615 zone, and then power up from there as we have a lot of managers that are coming in to purchase. So that's our overall analysis of where we've arrived thus far. Now, there's all kinds of, part of the discussion here. Don't forget to like and subscribe. Please hit that button, would be greatly appreciated. The next segment of what we wanted to review is, I called one of my manager friends on Wall Street today to just ask him about where he thought we were. And he said, look, if you got to purchase 1 million shares, you ain't going to do it all at once because you'll force prices up and everybody can see you coming. So often when buyers need to execute, they'll ask their traders, sort of tell them, I want to buy 1 million shares, but that might be executed over 1 or 2 weeks or a month or so. And so this is kind of the dollar cost averaging we discussed in terms of expectation of what the managers might do. And so therefore, I think that's what we're kind of seeing here, is that there's buying going on, but they're trying to be very systematic about it to keep from spiking the stock. And if you have enough people trying to do the same thing, you therefore end up with a nice upward push of the stock price in the fashion that we're seeing. I also think that if you watch how the numbers worked out, we sort of a jump at the beginning of the day where people are trying to hide trades in that first hour and a half. We kind of saw a jump at the back of the day as well, with somewhat of a lull in the 628 or 625 to 629 zone, kind of the middle of the day, where large managers couldn't blend their trades in easily with other large managers that are trading to get this done. So those are two of the variables that we saw that are lurking. Let me check my notes here. The next thing we want to review is that the stock price did seem kind of laggard last week once it was confirmed by the S&P that Tesla would happen all at one time. This brought up an interesting question, which is, why did the S&P do the month-long delay if there weren't any other solutions that they'd come in with other than to just do that? They could have just done it all in 1 week. All of this would have been done and there would be no delayed execution as we were seeing it. And the answer is that I think they were hoping for new developments to occur during that month to make the process smoother, because as Tesla's market cap increases or stock price increases, its market cap is increasing. And if you have a market cap weighted index, for example, the S&P, you now have all these managers have to keep changing what their Tesla allocation is of stock to stay weighted properly for those indices. So this can happen with the S&P and other indices. So today I specifically wanted to look at chaos at the Nasdaq 100. So one of the things that so there's this huge question mark about, it's known that there are at least $11 trillion worth of money associated with the S&P, and therefore Tesla gets, let's say, 2% of that, based on managers have to rotate to accommodate Tesla within that index. And, is that 100 billion? Is that 200 billion? Something like that is what the number is, but we don't know what percentage of those people have already made their purchases and therefore might influence the stock price of Tesla if they haven't done so already. Now, this brings up one of the question marks that's out there is there are a number of indices that people are using as a safe way to invest in stocks. So, for example, one I'd like to discuss today is called the Nasdaq 100. If you look at the return on the Nasdaq 100 over this year, it's actually greater than the return that the S&P has enjoyed. And it's a reflection of the fact that half of the Nasdaq market cap is actually FANG, Facebook, Amazon, Netflix, and Google. And then add Tesla to that, And all those companies represent half of the market cap of the Nasdaq 100. So another way, if you want to trade this and have some safety across a number of stocks that are growing, is to use an index fund that focuses on the Nasdaq 100, and you can get a nice sort of run consistent with what we've seen in terms of good returns for the year thus far. There's one problem with this though. Even if you have a Nasdaq 100 fund that's within the same house, let's say Fidelity, for example, or even Vanguard, both of those entities have an S&P fund and they have a Nasdaq 100 fund. And guess what? Currently, the Nasdaq 100 already has Tesla in it, so its market weighting is influencing there, and they're having to buy more. The other issue, though, is the S&P side of all these large houses has to now start acquiring shares that they did not have there before. And we think that's the big discussion about how and why Tesla's stock price is being influenced up. Now, what I'm fascinated by here is if you're a market cap weighted entity in terms of an index, let's say stock price of Tesla up 7%, their market cap is up commensurate dollars. And therefore, if you weight them properly in an index like the 100, you now are going to end up having to buy more shares to account for the market cap increase of Tesla. So there's an interesting question that's out there right now relative to all the indices, especially the S&P and things like the Nasdaq 100. And that question mark is, what happens on the 21st? So, and I don't have the answer to this, but I do have my thoughts. The question that comes up is, once all those once all the long-term managers that are having to use indexes have enough shares, what are they going to do? Are they A, going to buy the shares and hold on to them, which is the requirement relative to the market weighting, or B, are they simply going to just acquire, and once we get to the 21st, everybody's going to dump the shares? There is a trading thesis that's going on right now. That's what's going to happen is that a bunch of hedge managers are going to just buy up the shares, forcing the stock price up into the 700s, possibly the 800s by the 21st. Then what happens is once they know all the S&P and other indices managers have acquired their shares and they've been dumped on them at great prices by those hedge funds, we're then going to have the stock price crater because all these former owners / buyers that were short-term players will exit and therefore tanking the stock. The argument against what they're saying is that all the people that were buying the shares from them need those shares to keep their market weighting proper. And so it's my belief that there's a good chance that the expected drop on the 21st that everyone is planning to trade right now may not occur, because it's one thing to have a large institution like Vanguard go ahead and buy shares of S&P to maintain their weighting. It's another thing for them to actually pick up the shares and focus on holding on to their shares as part of the process of them being, their fund being part of the S&P. So we'll see how this plays out, but the day or two before and the day or two after the 21st are going to be some of the most amazing that we've ever seen. The final thing that I wanted to review today that sort of came out with a show we did on Mr. Chanos is the fact that him saying that he went from limit short on Tesla over to we've cut our position, possibly closed our position out completely, suggests that he's very clear on what's going to happen with the stock price, which is a dramatic updraft in Tesla's stock, and therefore it becomes very dangerous for hedge funds to mess with it, like his that's on the short side, because the stock is rising so rapidly. So it is good news that those guys are having to cover their short positions and reduce what they're doing, but they're also in a position where they're not trying to increase shorts because it's very clear that prices are about to skyrocket. And I believe today was an example of the start of that. I'd have to say that I'm a little surprised in sort of the delayed launch of this increase of Tesla stock price, because obviously last week was fairly quiet after it was announced that there wouldn't be a two-stage entry into the S&P. And the suggestion of last week was, have we missed or seen all of the buying activity that might occur? And clearly that was not the case. So now we're sort of entering, I want to say, the zone where the buying pressure for the stock is pretty intense. Now today, for our Patreon supporters, we typically take a look at a bunch of different variables to determine what the stock price is going to do during the day. And I would say that if you want to sort of develop a little thumbprint of where things might go, take a look at the sort of pre-market volume on the stock and what's happening with that volume and how that volume might roll into the day in terms of getting a sense for where we might be going. I'm also impressed by Tesla in this situation because we also have a phenomenon happening where even if the Nasdaq is down, because of the pressures that are rolling in for Tesla, it's continuing to gain steam while other big names like Amazon, Apple, and others are not doing much because there's all this pressure. And then the final note that presents an interesting problem here is that given that we're in a supply-demand squeeze relative to access to shares of Tesla, one of the question marks that's out there is what happens to the focus on valuations in terms of figuring out whether to buy the stock or not. For now, we have the Goldman Sachs 770 target, and we haven't gotten a lot of support from that from other analysts necessarily, but there's this question mark out there of, do we even talk about valuations on a normal basis? Because right now it's just a fight for share acquisition in large numbers by the huge funds. And so I didn't know if this is realistic or not, but one of the traders that we keep an eye on, had thrown out the idea of what about $1,000 a share for Tesla as it enters the S&P. And there are a number of people that are of the opinion that, hey, if I have a bunch of shares right now and you offer me $1,000 a share, I'm gone. And one wonders if that isn't one of those, hey, no problem to get shares if you're willing to pay those high numbers. And this also brings up another issue that popped up as the S&P was figuring out what to do last Monday, and that is that there was a discussion of the fact that when you look at S&P or some of these other indices, they're somewhat blind in that the managers don't sit there and say, hey, we're buying now based on these fundamentals and how it fits. They're really in a stuck position where they have to buy. And there was a discussion of how to make sure they didn't get hurt badly by having to pay high prices for Tesla versus what the prices were even a week or two ago. And is that fair to those who own the shares getting full value for whatever the market thinks might be appropriate? So some interesting questions that are posed. I think all of it means that Tesla enjoys a nice run towards the 21st, and there's an opportunity for a lot of current shareholders to make a great deal of money, is the overall assessment of what I see. But when you're messing with the markets, you always have to be mindful of interesting things that can occur. I closed this analytical point of our show today because the other thing one of our traders said to me, and I kind of have to agree with him, is he said that there are old traders and there are bold traders, but there are not a lot of old bold traders. So if you're enjoying some good profits, being mindful of staying in the game by not getting blown out can actually be a really good idea, and some things you might want to consider as you're involved in trading heading into what's going on with Tesla right now. At any rate, this is the close of our show. We next go on to our usual health tips plus. Just a reminder, prior to lovemaking, blood flow to your stomach for a large meal slows down blood flow to other areas, and therefore you might find a lot more enjoyment with a very small salad because you now have very little blood flow to digest that, and that's available for other activities. The second thing we wanted to encourage you to think about, based on our survey of many doctors, is to consider a 5-2 or some other fasting type diet as a way to help with mental health and all aspects of physical health as well. So we wanted to mention that. We also want to encourage you to consider 25 leg lifts or more each day on each leg. Strengthens the quad muscles, reduces the chance of knee issues. I guess the fourth item would be 30 SPF or better on a daily basis. and also encourage you from our kidney doc reference to eat fried foods no more than once a week to avoid things like type 2 diabetes, because your body will just store all that stuff near your organs and create other problems with it. At any rate, this is Greg for Teslafaninsight. Thanks once again for joining us. Tschüss German, au revoir French, lehitro Hebrew, hoda hafez Farsi, and heido Swedish, Zdravstvuyte, hello in Russian, Ohio gozaimasu Japanese, Namaste Hindi, and Assalamu alaikum Muslim. And in Jamaica, we say, Nuff respect, walk good man. Thanks for joining us. Have a great day, and bye for now. Best of luck on investing and trading as we go through this intense period for Tesla.